Welcome, good morning. You're watching Buy Now, Sell Now on ET Now with Cheryl as well as myself. I'm Harsh Saita. We'll take you through the next 1 hour. Cheryl, markets slipping. How should one look at it?
Actually, you can't call it slipping. Rather, you would say consolidatory phase coming in for markets, Harsh. But if you look at the markets, yes, we've given up from those elevated levels. We are sub that 18,600 mark when it comes to the Nifty. Hovering around the day's lowest point is the IT sector or the IT stocks. That's the main pain point in today's trading session. TCS is down about 1.5%. As you can see on your screen, there's some flashes. But yes, the stock is not moving on back of that. Tech Mahindra, the top loser on the Nifty. 3% downtick coming in for Tech Mahindra, Infosys down 2%, Wipro down 2%. So is HCL Tech down 2%. So the top 5 losers on the Nifty index at this point in time, all of them belong to the IT sector. So like I said, the pain point today is definitely the IT space. 2.5% downtick coming in for Nifty IT. Talking about the list of gainers, then you have Ultratech, Maruti Suzuki, DVs, Grasim are some of the gainers. Add to that list as well. You have Tata Motors. As of now, if you look at the advanced decline ratio, it is pretty neck to neck. It is 1:1 as we see it right now. But talking about the sectoral picture, like I said, yes, you have the IT sector that's the top loser at this point in time. But auto is the one that's holding on in the positive territory. So you have auto index that's trading higher by about 0.7%. Add to that list as well as realty index that's seeing 0.5% uptick. Apart from IT index, then which are the other sectors that are declining? It's the PSU bank index that's down about 0.6%. And something very shocking today is actually the broader markets. They are the ones that are underperforming the benchmark indices. You have Midcap index that's trading lower by about 0.5%. So that's the way how the markets construct is looking like. It's just been hardly even 2 hours of trading session. But yes, we are near the day's lowest point, Harsh.
Absolutely, day's lowest point. Broader markets underperforming. That's the theme of it. Let's quickly move on though. India's shift to Atmanirbhar Bharat has brought a bull run in defense stocks. That's the word coming in from Nikunj Dalmia, who's our managing editor at ET Now and ET Now Swadesh. Listen in to his rationale.
It's in a bull run. Sweet spot is an understatement. Why defense stocks are in a bull run? You must understand first, to take the clock back. What happened immediately after the COVID? The government's whole attempt towards making India Atmanirbhar ties in beautifully with the defense story. India has been one of the largest importer of defense, of defense equipment plus, in terms of the ships and the planes in the world. The entire sector has seen what could be called as a big change, and that's largely centered around the fact that Indian manufacturing in defense has got a leg up after the government's support. PLIs were import and import restrictions they came in. This is a sector which up until now was dominated by PSUs which were not very efficient. But there is a complete change in the way how PSUs are now conducting themselves, how they've adopted to technology, and how the fact that the government new policies are really benefiting some of the defense companies. So I'm not saying anything new. But at the current juncture, we must realize that after this stellar bull run in some of the defense stocks, are they likely to outperform or they can best be market performers? My sense is that in the near term, defense stocks at best could be market performers. They are unlikely to be market outperformers. Why am I saying that? Because while the nuts and the bolts of the sector has changed, there is a change in the way how the landscape of the defense sector in India will evolve. You must realize that in the defense sector, the order book will always look very bulky at the start of the cycle, but these are long gestation projects. You cannot build a submarine in a quarter, you cannot build an aeroplane in a quarter. It takes 5 to 10 years to actually make a ship and to build a submarine. As a result, some of these companies have got order book which may look very attractive if you are looking at companies purely from the standpoint of order book, and which is what markets have done. But sooner than later, I think markets will realize that some of these order books will take time before they actually kick back into profitability. And these are not like 30% margin businesses. These are 20-25%. These are margins which are less than 20. These are competitive businesses. There's a commodity angle to it. So while you may say that, okay, this space has got a long way to go, but in the near term, I think looking at the valuation, looking at the business cycle, and looking at the construct, and after the recent run up, my sense is defense stocks now at best could be market performers.
All right, so that's the take coming in from Nikunj Dalmia, who is the managing editor of ET Now and ET Now Swadesh, on what's happening in the defense counters. And he definitely said that defense stocks are not in a sweet spot, but in fact in a bull run. But let's ask our experts, should you be participating right now in this bull run that the defense stocks that is underway in the defense counters? Let's bring on board AK Prabhakar as well as Kunal Bothra on the show. Very good morning to you, Mr. Prabhakar, as well as Kunal. Thank you so much for joining us on ET Now. Mr. Prabhakar, let me come to you first and let's talk about the defense sector. What's actually happening in that space? Because every time you feel that there is some sort of a mild dip and you think that, okay, now is the time that you can venture in, and you see next leg of rally coming in this particular counter, especially the commentary that came in yesterday as well from the United States, that they are now more open in defense, more open to share defense technology with India. That also seems to be fueling in for the defense space, right?
Yeah, good morning. Thanks for having me here. Now, very important in defense is we are the fourth largest spender in defense. Now, so in the top 5 countries, we've spent now the fourth in defense, and we have this year FY24 budgeted amount is 1,70,000 crores, out of which India wants to make it in India about 75%. Locally sourced is going to be 75%. Previously, it was 68%. So we spend almost 3% of our GDP on defense now, and even when it comes to import, till now we have been a major importer. Now that is due to Rafale deal, which was done long back. So we got delivery of those aeroplanes, but due to that our imports are skewed towards very high. But going forward, maybe this year and next year, now the defense import will come down, but our exports are now picking up. FY23, our export was 15,920 crores, and government target in next 3 years or by the year 2025, it is likely to be 5 billion. That is almost 40,000 crores, which is more than double from here. So that means we are looking India to be a major exporter, and it includes helicopter, naval vessels, aircraft, missiles, armored vehicle, and many electronic items. BL has started to export to US. That is something very positive. And we have US saying that they will share some technology because they also want a manufacturing base. Labor is available here. And if they can share technology, India can become a defense major for many countries. It includes Germany, Japan, and US, where they want people to manufacture and place to manufacture. So India will be a very good base to manufacture. And if you see, we produce almost 15 lakh engineers in India. So in defense, it is going to be a long-term story. So there are many companies which will benefit. Solar Industries, HAL, which has doubled their capacity, Bharat Forge, Cochin Shipyard, Mazagon Dock, BEL, BDL, GRSC, Midani, and even Paras Defense. There are many companies in that field, and over a period of time, there will be ancillary companies also which will benefit out of it.
Right, thank you for that. Harsh also joining in. Kunal, could you give us your views on this particular space?
Good morning. So I think HAL and BL are the two names which I would be keenly bullish on. These are the two names which have been more strong as well as sturdy in terms of the price patterns. They're less prone to volatility. In fact, we've seen both these stocks trending back towards their 200 DMAs almost a couple of months back, and from there we've seen these stocks bouncing off to new highs. That has led to some confidence coming back into the defense back again. So I think it's more the leadership trends for HAL and BL which makes the stock stand out from the entire sector. So I would probably prefer to stick to these two names as compared to the other mid-cap names, because there are plethora of stocks in this particular category. So you can't be looking to buy all these names. So we'll stick to HAL and BL.
All right, HAL and BL are the top picks coming in for Kunal in amongst the plethora of stocks that are there in the defense pack. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your queries, viewers, so don't go anywhere. better. So let me get going with the queries that have already started coming in. And this one is coming in from Gauri Gupta. She's purchased Bajaj Finance at about 7,200 rupees per share, and this back in November 2022. Now she wants to know, is it worth holding for the long term, or are we seeing this stock becoming another HDFC bank? As in will be in a slow lane, or be a non-performer for a couple of years. What's your take coming in on this, Mr. Prabhakar? I believe that she is asking about the stock price movement of Bajaj Finance. So yes, where do you see Bajaj Finance in the longer term? If she's already invested, the fact that she's already invested, what should her strategy be now?
Yeah, no, initially Bajaj Finance was a very small company. Today the loan book is almost 2,40,000 crores. So when you have a bigger loan book, growing at 40% is not possible. Now growing at 20-25% is possible, and there are enough competition which has come. So the way the Bajaj Finance grew before, it is not possible. Now, so if you are a patient investor, you will make money. But here that kind of growth which we have seen from 2000 to 2020, I don't think that kind of growth is going to come. It will slow down. So even the stock prices will slow down accordingly. But it is a quality stock now, and they are growing. That is the most important thing. So the catch up will happen at a later point of time. If you have patience, hold on to it.
Right, and if I can switch over to Kunal, we have Venkata Rao from Vishakhapatnam, who holds 700 shares in GMR Infra at 44 and 400 shares of LIC Housing at 445. If you can give us your views on both of those, Kunal, please.
So GMR Infra, I would suggest to exit. The stock has been an underperformer. I think the best rally for the stock happened, I think, just about a couple of months back from 37 to I think 46, 47 mark. But then I think post that the stock has gone to a correction. So don't sense any major kind of an upward trend for GMR Infra. In fact, possibility of the stock coming back towards 37 is pretty much high given the current correction the stock is already going through. LIC Housing could be a stock which you can hold on to. Now the entire housing finance space looks very attractive. Of course, the formidable ones, the likes of Bajaj Finance, etc., have done exceptionally well. But LIC Housing is also trying to get into a bit of a recovery for itself. So if you are in from a medium to long term play, then I think you should continue to hold on to LIC.
Okay, this one is coming for you, Mr. Prabhakar, and this one is coming from Bala. He's writing to us from Chennai, and he wants to know if CDSL and CAMS are a good buy right now, because he's saying both of these counters are not going up even despite the market seeing a good rise. What's your take on both of these counters? Do you think it's worth a buy right now?
I think BSE will be a better buy. Now, in BSE, you play proxy CDSL also, and they have almost 50% cash of the market cap. So BSE will be better, because the kind of scale up you saw during 2020 and 23 in CDSL number of accounts, that is not likely to happen. So that is why the stock ran up. But now I don't think that kind of euphoria is going to be there in CDSL. BSE will be a better pick in this pack.
Right, and Kunal, we have Satya Veni, who follows you, by the way, again from Vishakhapatnam, wants to know whether it's a good time to enter the likes of India Cements and Karnataka Bank.
Well, India Cement you can look to buy, but again, I'm not sure of the risk appetite which you are looking to trade with, whether it's a high beta strategy. If that's the case, then you can prefer India Cement. But otherwise, you can stick to the large cap names. I think Ultratech Cement at 8,000 levels looks fairly attractive. You've seen Ramco Cement emerging as a good mid-cap breakout over the last, I think, 1 month, breaking past about 800 and then 900 mark for itself. So there are better cement names on the large cap front, which would look more better and more formidable for your portfolio. But again, as I said, it all depends on your risk appetite. Karnataka Bank, on the other hand, I think is going through its own phase of rise as well as consolidation in between. So if you're in from a medium term play, I think at 140.42 could actually be a good level to buy Karnataka Bank. That would probably indicate a minor mean reversion from its recent close of 127.
Okay, this one is coming from Sunil. He's writing to us from Muscat, and he wants to know about Sheshashahi paper and JK paper. Which out of these two stand out according to you, Mr. Prabhakar? And he wants to know whether he should invest in either one of them or both for the long term.
JK paper is our coverage stock. Sheshai we don't track, so I will be comfortable with JK paper. But paper as an industry, it has done very well during the Ukraine-Russia war, and now the correction has happened. So it might take few months before it can stabilize. So I'm not, if you are going to buy fresh, it is better to wait for 1 or 2 quarters before you enter the stock. But JK paper is a preferred pick.
Right, and Kunal, we have Mr. Ghosh from Delhi who has invested heavily in both Adani Ports Enterprises as well as Wilmar, in fact, all three. And what he wants to know is as to whether the problem with Adani shares is over and whether he should invest more at these levels.
See, I think trends-wise, Adani Ports, Adani Ambuja Cement are the two names which are more formidable. They are the ones which are relatively less prone to the volatility in the Adani group of names. Adani Enterprises also, I think, emerged as a good breakout possibility in the last, I think, two weeks. The stock has recovered from, I think, 2000 levels to 2600, 700, where the stock had tested, and now it's come back towards 2400 mark approximately. So even that stock is looking attractive. So chart wise, I think Adani Ports and Adani Enterprise could be names where you can continue to hold on. I'm not sure if Adani will work because the stock is actually going to, when it goes into a downtrend, it goes into circuits on the downtrend. So I think trading these kind of names becomes a lot more riskier. I would prefer in the order of maybe Adani Ports, Ambuja Cement and Adani Enterprise as the three names which you can keep from the entire pack.
Okay, Kunal, this one is coming from Mr. Balan, and you just spoke about BEL earlier on the show. He has 500 BEL at a price of around 96 rupees per share, and about some shares of 20 microns at a price of 82 rupees per share. Should he continue to hold on to both of these counters or look to shift to some names in the banking and financial?
I think you can continue to hold on to both of these names, 20 microns as well as BEL. Both of them are looking attractive. BEL we discussed earlier. I would probably be looking out for the stock hitting a fresh high. So maybe closer to 122, 124 is where you can look to book out profits.
Right, and Mr. Prabhakar, we have Suresh from Dubai who has 400 shares of Bank of Baroda at 131 bucks a piece. Wants to know whether he should sell or continue to hold.
I'm positive in PSU space. Now, after the State Bank of India, this is one stock where one company where they give a ROA above 1%, and they are saying that will be also scaled up. So I think this is one of the best run PSU bank, and now there is going to be a change in management where a young person is taking over. So I foresee he is appointed for 5 years. So now when somebody is appointed for 5 years, then you have a longer tenure in PSU. Then things go on a positive side. So Bank of Baroda is something I like on the PSU side.
Okay, Kunal, this one is from Sandeep, and he wants any short-term trading ideas from you because you had suggested Poonawalla FinCorp earlier. He's asking any short-term trading ideas.
So as of now, I think PFC is something which you can look to trade. The stock has come back towards 190, 182 mark. That's a stock which looks attractive. You can look out for maybe a potential target of 205 to 210 over the very near term. But it could be a bit of a high risk given the way the markets have behaved today. So there could be a sudden bout of volatility which can come back into the indices. So you can keep your position size a bit lower over there. And the other stock which I would be bullish on would be RBL Bank. The stock is inching towards a breakout. So I think at 172.3 mark looks attractive for a potential target of 188. Stop loss at 165.
Right, and Mr. Prabhakar, we also have Veni, who is a senior citizen from Hyderabad. He holds shares in LTTS. In fact, he's also suggested he's making a loss. Quantification not really told us, but what is your suggestion on this one? Should it be a buy, sell or a hold?
See, IT has been in a very bad space, but in bad time it is best to slowly accumulate because the good times will come very soon. So I'm very positive on LTTS and LTI Mindtree. So I think for a long-term investor you need to hold, but if you can, you can slowly do a SIP also, maybe quarterly SIP, which will give you a better average.
Okay, this one is an interesting query coming in from Kabir Bedi. He's writing to us from Punjab. He's holding 128 shares of Cyient at an average price of 0 levels, he's saying. And he's also saying that he's not inherited this counter. But he wants to know for the long term, how is the outlook looking for Cyient, Mr. Prabhakar?
So we have been positive on Cyient, but now the stock is almost double. So no, at these level there is going to be a demerger. So the demerged entity, how much wealth it will create, I don't know. But if you are a long-term investor, you can hold on. But for us, our targets have been overshooted. So at this current time, we have a hold.
Right, Kunal, we have Sudha Kaza, viewer from Mumbai, who holds Morepan Labs at 48.35. Could you advise her on what she ought to do?
So you can continue to hold on, but again, I think it's of course it's not a formidable pharma name as such. But then over the last 2 or 3 months, the stock is trying to take support at the 25-27 mark. If I'm not wrong, in the start of the year 2022, the stock retested the levels of 25, bounced off from those levels, and again recently over the last couple of months, the stock is bouncing off from that 22-25 mark back again. So you can probably keep a stop loss of 25 or maybe 24. For Open Labs and continue to hold on. If the recovery pans out for the entire pharma sector, then I think eventually even Open Labs can get into a recovery and possibly come back to your cost price above 40.
All right, on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of the stock related query viewers, so don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now. We'll continue taking your queries, so do refer to the number coming up at the top of your screen to send us your queries. But we'll quickly move on. Let's, Mr. Prabhakar, if I can bring you in, could you tell us, we have a viewer, Mr. Guru, who wishes to invest in TBZ at the current market price, slightly longer term investor, wants your views.
TB is that we don't track, so I won't be able to comment on it. But Titan and Kalyan Jewelers are better placed in jewelry pack. So those are our picks there.
Right, and let me take it to Kunal. Kunal, we have Kaushik Mitra from Mumbai who holds Ease My Trip at 53 rupees a share and wants your chart views on the same.
See, I think it's a stock which has been extremely sideways, and I think looking at the recent history for Ease My Trip, it's a stock which suddenly gets into a bout of momentum, and otherwise, if you happen to buy this at the fag end of the price rally, you're then left with holding the stock for a substantial period of time. So the only concern with stocks like Ease My Trip is to anticipate the start of momentum, and that becomes a lot more tricky affair. So I would believe that maybe wait out for another couple of weeks. I believe that if the Midcap index remains vibrant like what we've seen over the last many days, then I think Ease My Trip possibly can also make a comeback and give you that spurt on the upside over the very short term chart. So as of now, I would recommend a hold, but I think as a portfolio advice, I think these are not the kind of stocks which you should be having as part of your core portfolio.
Right, and Mr. Prabhakar, if I can bring you back in, we have Pradeep from Kolkata who wishes to invest in Anantraj. He holds Anantraj at 108 and holds Tega as well at 629. Just wanted your views from a long-term perspective on both these counters. He's a new investor.
Anantaraj and Tega, both we don't track, but for Anantaraj, I will tell you one thing. Now, whenever the economies globally has gone from 2 trillion to 5 trillion, real estate has been one sector which has outperformed. Only 3 countries have achieved that milestone. One is Japan, US, and China, and we have had euphoria in real estate. So real estate stock will do very good. But our preferred picks are different. We like Oberoi Real Estate, Kolte Patel, and we like Godrej Properties, Prestige, Brigade, all these mega companies where we have seen the track record. So Anantaraj is one I have not tracked, so I won't be able to comment. But real estate as a sector is going to outperform. That is what I can say. If you are there for 3 to 5 or 8 years, this is one segment when we reach 5 trillion or $6 trillion economy, these sectors will be an outperformer. So slowly buy. If you understand the stock or if you understand the management, then you can take the risk. But I would not advise there. Tega Industries, we don't track.
Okay, this one is coming in from Sushil writing to us from Trichy. Kunal, this one is for you. He wants to know whether he can buy Mirza International at current price. Also, what's the What's the outlook for the next 6 months on the charts?
I think if I'm not wrong, it's a stock which is part of the ASM group on the exchanges, and if again I think trading at 54, 55 levels, a very high beta name in that regard. So I'm not sure of the rationale of the viewer to invest into this stock, but I think these are the kind of names which you should just look out to trade from a very short term play rather than look out to hold on to these names. So if you're making anywhere closer to 10%, 15% in a short span of time, it's a good time to book out profits over here.
Right, and Mr. Prabhakar, I have a very interesting query here. Mr. Satya wants to know whether to invest in an HDFC bank or in defense stocks, and which are the one or two defense stocks that you've already recommended, but whether HDFC bank or defense stocks is what he really wants to know.
Challenging question. See, HDFC Bank, the kind of aggressive expansion they are doing now in their commentary, they said 1,500 branches every year for next 2 years. That means 3,000 branches. They if you take 3 years, they will be doubling their branches. That kind of effort will start to pay off after 3 years. Defense stock, maybe next 1-2 years they will play out better than HDFC Bank. Maybe that is a distinction I can make, but HDFC Bank for a long-term person, that is going to do very good. And here in defense, HAL is something where I expect their revenue to double in the next 3 years. Their new factory, which has come near Bangalore, it is a huge factory where the revenue potential is going to be 20,000 crores in FY 26 or so, going forward. So they have a huge potential, and you have Cochin shipyard where the results are very bad, but in a shipping company, your revenue recognition takes time. They take 5 to 8 years to build a ship, so it takes time. But Cochin shipyard is one more which looks very attractive. Even BDL, which makes a lot of missiles or components for missile, is something we like. So in defense there are n number of names. In private, we have solar industries also where one can look at.
Okay, this one is coming in from Rajan, writing to us from Delhi. Kunal, this one is for you. He has 200 shares of VIP Industries purchased at about 670 rupees per share. He purchased this a year ago. Now he wants to know what should he do with this particular counter. As you can see, it is fallen from his buy price. He's saying he can hold on for one more year if you suggest that.
Yeah, you can hold on. I think 550, 540 approximately is a good support for VIP Industries. So maybe closer to 580 mark or 575 mark. If the stock happens to correct into this leg of the correction, that could be a zone where you may look to average and bring your cost price significantly lower.
Right, let me stick to you, Kunal. We have Ayush, who holds Phenolics cables with good returns, but the stock is actually down 11% over the last month or so. Wants your advice on what to do?
Well, I think you can continue to hold on. Possibly the stock is entering into the oversold territory. It may go into one more round of correction, maybe retest the levels of 750 over the next leg of downtrend. But I believe that sooner or later the stock would probably form a medium-term bottom and then get back into the thick of momentum. We've seen that happening for Phenolics cables many a times prior as well, that the stock gets into at least a 10% correction, retests the previous lows, makes a lower swing low, and then bounces back to make a fresh swing high for itself. So I think you should be looking to hold on to the stock. If possible, then I think closer to 750 mark, you can look to even average further.
Okay, this one is coming from RS Mundada from Pune, and this one is for you, Mr. Prabhakar. He's saying as most of the cement companies have already rallied, Nuvoco Vista has not participated in that sort of a rally. So he wants to know whether it makes sense to go ahead and buy this counter right now at 360 odd rupees. And also he is saying that he has Salasar Tech, 200 shares at 47 rupees per share. What should he do with that counter?
Nuvoco, we don't track, it is not in our coverage, so won't be able to comment. The other stock, I've not got the name right.
It is Salasar Tech.
No, here also we don't track it.
Okay, Kunal, would you like to take the query on Nuvoco Vista, whether he should go ahead and purchase it right now, given the fact that this one has not participated in the cement rally, as well as on Salasar Tech?
Well, you can consider buying the stock, but then, as a strategy, you'll always have to remember that the markets will always give premium to the stocks where they would find that, there would be more visibility, more clarity. And, those are the stocks which form trending stocks in a sector. So I think earlier I flagged off the likes of Ultratech Cement, which is looking extremely charged up and strong at current levels. These are the stocks which are less prone to volatility and can give you consistent returns over the near term as well. So I would probably prefer that you stick to the larger cap names, the likes of maybe Ultratech Cement, Shree Cement, Dalmia Bharat, etc., as a better bet. But you can look to bet on Nuvoco Vista as well. I think maybe closer to 340 you could be your stop loss, and you can continue to buy at current levels.
Right. And Mr. Prabhakar, we have Tushar, who's a viewer, holds Tata Power as well as Samvardhana Motherson. He wants to know from a 6-month to 1 year time horizon whether both these stocks are a good hold.
I think so. No, Tata Power is our top pick also. No, so they have diversified away from power. So no, they are into EPC contract also, where they have a huge order book. So long-term prospect is very good. Whether 6 months to 1 year, whether it will perform is something I don't know. But if it is 3 years, this is likely to do very good. And even Motherson is something we like. But it is spread across the world. So that is something, when you are in multiple geographies, it becomes very difficult to track the news flow. But we like the stock.
This next query that I have is coming in from Mukund Sharma, writing to us from Hyderabad. Tata Elxsi 75 shares purchased at 6,220 rupees per share, making good profit. Should he continue to hold or sell? Kunal, Tata Elxsi, someone looks like he bought at the right price. What should his strategy be now?
Yeah, I think you've bought at a very good price. 6,200 was approximately the base for Tata Elxsi in the last 2-3 months. It's come back to a 7,600 mark where it's trading right now. I think it's a good time where you may look to consider booking out profits, because the IT sector overall has been a bit wobbly. There could be a possible corrective phase which could come back into these IT names. So maybe another 700-800 points correction on Tata Elxsi could be a point where you may look to consider rebuying. So I would suggest to book out profits.
Right, thanks for that. But each time we slip into a very short break. But do stay with us. We'll have more on the other side.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of your stock related queries. And this one is coming from Puneet, writing to us from Delhi. Kunal, he's asking about JTEKT India. 140 rupees is the buy price, 300 shares. Wants to know what's the expected target for the next 10 days.
Okay, don't track the stock offhand, but just looking at the charts preliminary, I think maybe closer to 150, 155 could be a potential target range for JTKT. The stock has got back into a momentum, I think, just the last 4-5 days, from 118-19 mark towards 139 where the stock is trading right now. So possibly in another 10 days, 10 rupees on the upside, say closer to 150, 155 is where you can expect a target range for the stock.
Right, and Kunal, let's stick with you. We have Suresh from Chalakudi, Kerala, who owns 500 shares in Ambuja Cements. Wants your view on the counter for the short term?
I think you should continue to hold on. I think the stock has come back, very strongly and formidably, from levels of 575 where it was trading earlier, towards a point where the stock, I think, I was 315, 320 mark in the major sell-off for most of the Adani group of names. So I think coming back towards 450 mark where it's trading right now, it's a formidable comeback for Ambuja Cement, and gives an indication that this could be a sustainable trend for the stock. And also, as I said earlier, that the cement space looks to be a lot more stronger, and it makes sense to stick to the large cap cement stocks. Ambuja Cement, Ultratech Cement could be names where you can continue to be bullish on.
Okay, this one is coming in from CG, writing to us from Karnataka. Wants to know whether it's a good time to buy VRL Logistics and NFL. Mr. Prabhakar.
Yeah, we are positive on VRL Logistics. No, they have restructured their business. They have sold their bus business and they are concentrating only on trucks. So and they are replacing a lot of trucks, and which will increase their margin. So we are very positive on VRL Logistics. What was the other stuff?
The other one was NFL.
NFL.
Fertilizers.
Yeah, I know that is a good stock. Now we are moving towards nano urea, and now yesterday Coromandel said that they will be launching nano DAP. So only few companies benefit in agrochemical. That is where NFL also is a major beneficiary of nano urea.
Right, let me quickly switch over to Kunal. Kunal, we have Ashwin who holds Tech Mahindra at 1125. What's your view on that one?
Well, it's been a struggling stock at least over the last 1 or 2 weeks. The stock has come back towards 1125 mark, but I think this is the fourth attempt for the stock in the last so many months that it's trying to scale past about the 1125 mark. Eventually, this level would be broken down, but I think broken out. But I think it could be a matter of time that you'll have to hold on to the stock. So if timing is not an issue, then I think you should continue to hold on.
All right. This one is coming in from Anand Nayak. Kunal, I'm unsure if you track this counter, but Roto Pumps, do you track this one?
No, not really.
All right. So let me skip this query because I'm very doubtful Mr. Prabhakar also tracks this one. Let me take this one is from TP Vinod. He's writing to us from Salem. This is for you, Kunal, specifically. He wants to buy Tech Mahindra August futures. He's asking, should he buy today or wait for some more dip? Also, what's a good level to enter and roll over for the next 6 to 12 months?
The second one is rollover.
Yeah, rollover.
Okay, so I think you can buy Tech Mahindra. As I said earlier, that possibly the 1125 mark could be breached, but the only question is that how much time would the stock take to consolidate and then break past about 1125 mark? So that's the only concern. You can consider buying, say, the next month's futures for Tech Mahindra. 2 successive days of correction. Ideally, the third day, is where we expect the correction to settle into. So hopefully tomorrow, if the stock is down, say another 10-15 points from current levels, say closer to 1060 odd mark, that could be a good point where you may look to consider buying the stock.
Right, and we have an unnamed viewer as well, Kunal, who's looking at DCB Bank. He's bought 500 shares at 115. What is your medium-term target on this one?
So bullish on the mid-cap private sector as well as the PSU banking names. I think DCB Bank has also recovered quite smartly from 65.17 mid of 2022 to 100 plus mark. It's settling about the 100 levels, and in the last couple of months of the price volatility, the stock has broadly maintained the levels of 100 approximately. So I would probably expect DCB Bank to start performing quite well over the medium to long term. But if you're asking over the very short term, then I don't sense any major breakout which could happen for DCB Bank. Only if you're a long-term investor, then I think it makes sense to hold on to the stock.
All right, this one is coming in from Ravi Tega. This one from Hyderabad. Kunal, this one is for you. We did speak at length about the defense counters. You did say HAL and BEL are your favorites in that pack, but he has Mazagon Dock, which he's holding for the last 6 months at an average price of around 820 rupees per share, making really good profits on this one right now. So he wants to know what sort of a target should he envisage for this one, or should he look to exit and then re-enter at current market price? Also, he has some cash right now, so he's asking, should he go ahead and deploy it in Paras or in DCX India?
So I'll first start off with Mascot Dock as a query. I think the yesterday's volume pattern indicates that maybe the stock is entering into an extremely overbought territory. Now, when you generally see such kind of strong volumes after a move which has already happened for the stock price, it's generally an indication that maybe the move is getting into a phase where the stock may consolidate further. So I would probably be of the belief that if you're making a good 200 to 50 odd points as a profit for Mascot Dog, then I think at least book out 50% profits, if not more, for the stock, and then maybe look to buy back on dips or on corrective phases. From the other space which you asked for, I think DCX India could actually be a better stock. I think at 225 to 27 levels where it's trading right now, looks to be a stock which is getting back into its groove, recovered into a higher high, higher low pattern over the last 2-3 months, and especially from the sub 200 level. So looks attractive and could be a good proposition for the near term.
Right, Mr. Prabhakar, let me switch over. Sahana from Chennai holds around 250 shares of Aegis Logistics at roughly 226 rupees a piece. Wants your guidance on the medium term on this particular counter.
Fantastic company, and they have expanded their capacity. So I think it as a whole from my side.
Okay, this one that I have is coming in from Akshay, writing to us from Dubai. Bajaj Finserv, 100 shares at a price of 1350 rupees per share. Should he hold or exit? He can hold. He has a time horizon of about 2 to 3 years. Kunal?
I think you should definitely consider to hold on to the stock. Bajaj Finserv is just looking, as more of a recovery chart. It's formed a bullish, divergence over the last, 2-3 months back when the stock was at 1200, 1250 mark. So I think in that regards, it's just the first phase of recovery for Bajaj Finserv. I think you should consider to hold on.
Right. Let me quickly take it back to Mr. Prabhakar. We have Hemant here, who holds Triveni Turbines at 302 rupees a share. He wishes to continue to hold this counter along with Zensar Tech for the next 3 to 4 years. Could you give us your views on this one?
I'm positive on both these stocks, but Triveni Turbine is not a cheap stock. So, but growth is catching up. So, I think if you are ready for 3-4 years, nothing to worry. Zensar Tech, we are very positive. Now, there is a new management in place, and we think things will turn positive for the company.
Okay, this one is coming in from Sukesh from Kochi. Kunal wants a short-term target for MOIL. He's already holding 500 shares at a price of 160.
Well, short-term targets you can possibly keep closer to 164, 65. I don't expect any major uptrend for MOIL. The stock is very moderate beta over the near term. I think in the last 2-3 months, it's recovered from 145 to 160. That's a meager 10% up move. So if you're in for, say, another couple of weeks, then I think closer to 165 approximately could be a decent target for MOIL.
Right. We'll switch over to the rapid fire. We're at that time of the show, and let me take it straight to Kunal. Kunal, your views on CG Power at current market price?
Looks attractive. I think you should consider look to buy or hold the stock.
Another one coming your way, Kunal. Vishwanathan Nair wants to know HPCL 196 buy price. Also Quest Corp 357 is a buy price. Should he book profits?
So HPCL you can consider to hold on. Quest Corp you can consider to book profits.
Right. Mr. Prabhakar, your views on Cochin Shipyard at these levels?
Positive, bold.
Okay, Rakesh from Delhi he just recently sold 500 shares of ONGC. Should he re-enter, Kunal?
I think closer to 145, 47 could be a better level to re-enter ONGC.
Right. Kunal, 50 shares of Dixon Tech bought at 4,300. Your views on that one, please?
I think you should consider to hold on. Possibly, then if possible, then maybe closer to 3,750. If the stock corrects, looks to average further.
Okay, from Shiva from Hyderabad, Phenolex Industry wants a target. He's already holding some shares at around 1,000 shares. No buy price given, Kunal.
I think you should consider to hold on.
And what's your view on Raymond, Mr. Prabhakar?
Hold on to it.
Okay, Subramanian from Chennai wants to know about Elecon Engineering. 25 shares, 390 rupees per share is the buy price. Kunal, should he hold or sell?
I think you should consider to hold on the stock. I think it's doing exceptionally well, trading at 545 plus mark. Looks attractive as a chart.
Right. Mr. Rao Murthy from Bahrain asking us a query, Mr. Prabhakar, on Larsen and Toubro. It's run up quite a bit, but where do you see it now?
So in capital goods, there are better opportunities. We like ABB and not Timken at this point of time.
Okay, Kunal, this one is from Shrikant from Hyderabad, holding Zomato, 2,000 shares, 69 rupees per share. What sort of an upside should he expect, or should he continue to hold or exit?
Continue to hold on.
Right. Do you track Hardwin? If at all, you can give us your views, Mr. Prabhakar.
No, I'm not getting the query.
Okay, Kunal, would you have a view on that one?
I would suggest to exit the stock or book profits if you're making money.
Alright, and with that we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Mr. Prabhakar for joining us on the show, taking the viewer queries, giving your take on defense pack as well. And with that, we are totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Harsh, myself, and the team that put the show together. But stay tuned, Markets at Noon coming up next.